what is the most effective way to pay off my student loans? Should I do the 10-year plan that they give you with school when you get your loans? Is there a faster, more effective way in which I don't spend as much interest?
You can reduce the amount of interest you'll spend on your student loans by paying them off ahead of schedule. By law, virtually all education loans allow penalty-free prepayments, which means you can pay off the entire balance early, or you can just throw in extra payments. The more extra payments you make and the bigger they are, the quicker you pay off the loan and the less interest you pay. Let's say, for example, you have a $20,000 loan with a fixed rate of 6% and a 10-year term. If you stick to the original 10-year schedule, your payment will be $222 a month, and you'll pay $6,867 in total interest charges over the 10 years. If you make, say, an extra $50 payment each month, however, you'll pay off the loan in just over 7.5 years and pay $4,993 in interest, pay an extra $100 a month, and you'll pay it off in a little over 6 years with $4,008 in interest charges. For more details on how prepayments work, you can check out the prepayment section of the FinAid site. And if you want to see how much making extra payments of various sizes can reduce the term and total interest payments on your loan, you can check out the prepayment calculator at the same site. Now, before you just start plowing every extra cent you have into extra loan payments, there are a few things you want to keep in mind. First, don't forget that student loan interest is typically tax deductible. Keep in mind, too, that not all student loans have fixed rates. You'll still save interest prepaying a loan with a variable rate, but you won't be able to calculate the savings in advance as you can with a fixed rate loan. Finally, remember that even if you have the wherewithal to make extra payments, you may want to consider holding off until you're on a firm financial footing. For example, you'll probably want to put the equivalent of 3 to 6 months' worth of living expenses into a savings account or money market fund so you have a reserve fund to fall back on in the event of unforeseen expenses or emergencies. But if you've taken care of the personal finance basics, then making extra loan payments can be a convenient and easy way of getting out from under your student loans more quickly and saving yourself some interest payments in the process.